Mark, the market seemed to want to believe that it could join the dots between what we heard from President Trump and the end of conflict, more passage through the Straits of Hormuz. Not entirely clear how we do that, but risk appetite seems to have returned to some degree this morning. How would you assess the market outlook from here?
Yeah, risk appetite has returned exuberantly. I'm certainly struggling to join the dots, Anna, this morning. I think if you'd said, say, last Thursday that, look, as of Tuesday, it would look like the Strait is still closed. It would look like we've not had any SPR release of oil. It would look like Trump had said the conflict's probably going to last another week, even if it's nearing the end. We'd be told that the son of the prior Iranian leader was now the new leader, i.e. no regime change. I don't think most people would expect stocks to be trading where they are now. I think they'd probably say, okay, it's fine where oil prices are. They might expect them a little bit higher than they are now. There's about a 35% premium in oil prices based relative to the previous year's average. I think people would expect maybe a little bit more, but that doesn't seem out of order. I think rates have probably overreacted in the short term to the oil price move, but that's in context to where they're positioned before, so that's fine. FX moves have been logical, dollar strength, EM weakness, but nothing too carried away. I think the bit that stands out is stocks have been very resilient so far, and even though I am overall very bullish for 2026, I am surprised they're quite so resilient in the short term, and that's the asset that seems, the weak link to me.
Mark, haven't stocks called this one right? This is a president now who has signalled he wants an off-ramp, and that is the clear takeaway for these markets. Yeah, I think that is definitely a very valid way to look at it right now. The bit that I slightly question is that, so to kind of running with your idea there, Tom, is that the idea that stocks traders who said it'll be a taco from Trump means, basically ignore this. But have we really had a taco from Trump? I mean, we haven't had any concrete steps. The war is ongoing. Missiles are still firing through the air. Drones are still being intercepted. We've not had the SPR release. We've still got more to do. So we've not had an action of taco yet. Yes, we've had the move on the waivers with Russia. We've had a few little minor exemptions, but overall, we're still ongoing. So that's why I'm a little bit suspicious in the disconnect with stocks.
Mark, we just had a guest on from the world of private credit from Partners Group, very confident about the outlook. Do you agree with that? Are you concerned about stress in private credit in this higher rates environment?
Look, I'm not a private credit expert. I think part of the problem is that everyone outside the industry is really struggling to know what's happening inside. That's why there's concern out there. I'm not convinced that this is the big blow up in private credit. This is not the a big debt bubble. What I do know is that the margin and inflationary impulse from what's happening in the Middle East and higher yields isn't great. It is exacerbating the problem when there's a lot of stress. And the problem with credit problems is they can become spiraling when there is that stress out there. So I remain a little bit concerned, but I'll have to trust the insiders, unfortunately.